Alright guys, I'm back. I started the stream and I put the wrong thumbnail, so ended it after a couple seconds. Now we are back. We're gonna keep this one more professional. I'm not in bed, I'm just chilling at my computer, and we're gonna be reviewing the entire week, as I have been all of yesterday. In the middle of this conversation with FA right now about the definition of market maker. My opinion on this is that market making is literally anyone who provides exit liquidity for someone else, because you are making the market possible by providing exit liquidity for an opposing market participant. So what I was explaining to FA is what he's saying. He was talking about automated market making, which is basically one tick automation where they put a limit order in for one tick and they sell for a tick above, and that's done by machines. But what I'm saying is anyone who provides liquidity for someone else, that's by definition market making, because you made the market possible. You provided liquidity. If you're trading profitably, that is, right? Bro, just hit a 1 to 5 hour trading gold. No way, bro. Let's go. You beast, bro. You beast. Send me the Alright, there we go. Oh my gosh. Dude, I'm so glad I've been helping you. So that actually makes me so happy. I'm so glad, bro. Seriously, I'm just happy for you. That's awesome. I don't know why, but this is super tight right now, and it's making this fall out. That's, I think, it's kind of stuck, honestly. Whatever. If it's working, if the mic's working, that's what matters. So the mic's working. I really enjoy watching your stream, bro. You're so dope. Dude, that means so much to me. So, I was going on a rant before either my mic fell out or it was disconnected. I'm not really sure. But I was going on a rant about market. F and I are having this debate right now about the definition of a market maker. In my opinion, anyone who provides exit liquidity for someone else, that's market making, right? You made the market possible. You put a limit order within the order book, which allowed someone liquidity to enter the market. Any limit order, placing an order and trading profitably is market making. What FA is saying, FA is like, bro, it's only market making if you have one tick, selling one tick higher and buying one tick higher, and then taking profit without fees. And what I was explaining to him, and I'm like, that's market making too. That's also market making too, but that's automated market making, right? Market making is anytime you provide liquidity. Period. Profitable trading is market making, and that's why they call it market maker buy model. I don't know, man. I wanted to finish that rant because I got disconnected. But dude, I'm so glad I've been helping you. But that was in the middle of this rant. Let's see what FA said in response to me. And I don't know why, but this thing is kind of stuck. I don't know what your opinion. Exactly. Anyone that's putting an order in to provide liquidity for someone else, like if I'm trading profitably, that means that I entered a position and provided liquidity for someone else in the market. That's part of market making. That's part of the market being possible, is you providing liquidity for someone else. Both definitions are right, in my opinion. Let's see what FA said. I think markets are run by hedge fund only. We are participants that have no weight in market. Less than 3% of volume are retail. So I wouldn't say that the guy who made 3% of a school project really made it. I would say participated. Bro, I don't know. I mean, anyone who provides liquidity is making the market possible. That's my end of story. Like, I really don't think it's the debate. I think it's just a fact. Exactly. I don't think I get what FA's saying, but it's not true, bro. Like him saying that only automated market makers are market makers. No, bro. Anyone who provides liquidity for someone else is a market maker. That's literally the definition. I mean, I'm not gonna argue with him. He can have his opinion, but I mean, I don't really care what he thinks, bro. Because anyone, hedge funds are hurting the market, dude. Everyone's a market participant, whether or not. Here, I'm gonna respond to him actually, dude. Oh my gosh. Oh my gosh, bro. FA. I'm sorry, but FA is wrong on this one. Alright, guys. We're going to review the past week of price action. I already started reviewing the market in the streams yesterday, but I was kind of in bed, kind of tired. Hopefully this time we can get a pretty clear view on the market in every little detail. One thing I haven't looked at yet that I think we should really learn from this week is the overnight gaps. So that's the first thing I'm going to look at, because I looked at a lot of other stuff, and this is just the first thing I thought of to look at today. So we're going to look at the overnight gaps that we had and seeing how we actually could have used these to frame a bias right after market open, and then a trade we could have taken to fill this overnight gap, right? And you guys will know that this is just one of the best ways for super easy bias. Super easy. I'm going to make a video on this soon, a short form video, but basically if you want like a free bias right at 9:30, pay attention to where that overnight gap forms. Just pay attention. Because this overnight gap, it's going to be an amazing target. Because why? Because the previous New York price action is going to be way more. There's going to be way more volume at that opposing New York price action than there was at the overnight price action. That's why when the overnight gap forms, you target the other side of it, because at the other side of it, there's going to be stop losses from the old New York price action. Most people do not understand how this RTH gap works, but that's how it works. That's why it gets filled, because it's a gap between the highly liquid price action in New York and the not so liquid price action that happened overnight. Not necessarily not liquid, but more volume, right? There's more volume in the price action that occurs in New York than there is in overnight price action. And that's just common sense, because the market's like not even open. So I think that's all the RTH gaps. Now, then again, actually, I think I marked this out badly, because we should have I should mark it out like this. Bro, you are making such dope contents and so dope lives. Why do something different, bro? You can get so much more viral. I really want you to go viral. Why lives and so dope lives? Why do something different? I'm not doing something different, bro. I'm gonna keep doing what I'm doing, and I'm basically never gonna stop, man. I'm gonna keep locking in, keep doing what I'm doing. Not really care what anyone thinks. People might say it's crazy or whatever, and I don't care. It's just, at the end of the day, I enjoy it. I do what I do because I like it. And here, wait, this is the close, right? We got to go from close. We got to go from close to open. So this candle closed here, then opened here. Okay, so this is valid. Yeah, man. I'm just trying to do my best, trying to help people. I mean, the craziest part about all this, everything I teach in these videos, is it's all real, valid, true, and facts. It's all facts. Everything I teach about the market, it's all factual. It's all real information about how these markets move. That's being gatekept. It's gatekept because it's the truth. It's basically how to make money, and money runs the world. Money runs the world. Let's be real. Money runs the world. They don't want you to know. People don't want you to know how to make money. People don't know. People don't want you to know how these markets really move, because people want to gatekeep. People want to make sure that you don't know what you're doing and you stay unprofitable. And that's just the nature of humans, right? That's why I work so hard, because I'm trying to go against the grain, and it's not easy. Dude, I hope so. That would be pretty sick if I could go live or viral. Yeah. The most recent video I made is pretty good. Okay, so let's stop getting distracted and actually review kind of what happened. So right at 9:30, here's the first one. Let's go move electronic market hours. Literally, there are. I know, man. Isn't it crazy? Like, everyone's a faker, and I'm like, bro, this is the real deal. This is the real stuff. This ain't the fake stuff. This is the actual real profitable trading type of stuff. And then everyone else is going viral, and it's like, bro, okay, whatever. All right, so here's this overnight gap. Very, very clear target, right? We had this was such a clear, obvious target for essentially, well, actually, I'd mark it out like this because this is that void. That's going to be the draw on liquidity. And such a clear, obvious target for when the market opens. Dude, I really appreciate how nice you're being to me. That means a lot, bro. It really does. It really does. Yeah, I guess I kind of looked at this a little bit, but we swept out this high. Such an obvious draw on liquidity, right? Liquidity sweep of this high. And then it's so funny, the amount of people will just hate on me and just say, bro, that's not real, that's fake. It's all just BS. And I'm like, oh my gosh, bro, I'm literally trying to give you free sauce. I'm trying to give you the good stuff too, like the good stuff, not even like the mid stuff, the super good sauce, bro. And these people, they come on here and they're like, yeah, it's all BS. Just quit trading. You're like, I almost feel like maybe it's the only way that, like, reason for logically why anyone would hate on someone giving free sauce is because they know that it's true and they're trying to gatekeep. That's the only way. Because, like, what's the downside in some random guy on the internet giving sauce? Even if it's false. Okay, if it's false, it does not harm you. There's only infinite upside. And the ironic part about it is they'll still hate on me. You're the best mentor, bro. How can I not respect you? That means so much to me. Bro, if you're not in the Discord, you should join the Discord. I really... I'm trying to just build this community of people that all can learn from each other, so definitely recommend it. But yeah, very obvious liquidity sweep here. We had a this was probably the only type of key level we had, which was this rejection block. I'm not necessarily saying that's what I would take, because it's not necessarily obvious. We don't even have SMT, I think. Let's get rid of these other RTH gaps for a second. All right. So we come into the market right at 9:30. Ah, yes. Thanks, man. I appreciate it. So going back all the way to that Tuesday. So this overnight gap, you see how nicely this got filled and how it was just such an obvious draw on liquidity. The nice thing about RTH gap is if you can get your entry, you can ride the RTH gap down to the fill. And it's going to be a crazy RR trade. It's going to be crazy nice. And you really, once you get in, the hard part's getting the entry. Once you get in, the draw on liquidity is just the easy part. But the hard part is, okay, how do I actually get in on a trade here? We had this 15-minute rejection block. Here's 9:30. So I guess let's mark it out like this. So there's the gap. We end up getting S&T right here. I think this is pretty nice. Let's look at YM. I kind of already looked at a lot of this already. I'm not even going to lie. Like, I've looked at most of this price action, but let's just go back anyway. Yeah, so yeah, I'm not really seeing anything obvious. I don't really like using rejection blocks if there's no SMT with the rejection block. Meaning, because the reason being is just because, I don't know. I like having a rejection block that actually has SMT, because that means that it's actually has a higher probability to be the high. But anyway, I guess let's just go back and like take a look at what else we can learn from this. So, what's the entry to go target the other side of the RTH? I mean, it's very obvious. That we were gonna go fill this. Maybe a 1 minute change and stayed out of this. Actually, this might have been better as a 5 minute gap. Yeah, honestly, I don't like using rejection blocks that much. I think a 5 minute gap makes more sense. Honestly, this looks kind of like a 2022 model. Actually, this has got to be what it is, right? I know that there's no break of structure, but like I've said in the past, if there's displacement, you don't really necessarily, and there's a liquidity sweep and there's an obvious draw on liquidity, honestly, you don't need that break of structure, because on the lower time frame that there is going to be a break of structure. That's why, right? Because we had displacement, 5 minute for value gap. As long as there's displacement, there's probably going to be a lower time frame break of structure. It's just conceptualize that, right? If this has got displacement, there's going to be a lower time frame break of structure. We could actually verify this on the 1 minute. Yeah, so yeah, like clearly you can see on the 1 minute, wow, look at that, we do have a break of structure. So on the 1 minute, this is most definitely a 2022 model, where we swept out the high, then we have a displacement leg, we rebalance it, go into that fair value gap. As always, it's always fun to see, okay, well, was this within our dealing range? It's always fun to look at, right? I always like to look at it because the more you actually study these dealing ranges, you'll realize, like, it might seem stupid to you at first, but the more you study these dealing ranges, you'll realize, wow, it's actually an amazing confluence. It's an amazing confluence. Let's see, where did it go anyway? Oh, it's up there. So let's bring this down. That should be it. Down to 4. Oh my gosh, this actually fit pretty well. No, that's actually really nice. Now, fair value gap's not in the fair value gap partition, but still. We're at one side of the dealing range. We go to the other side. Where's the first presented for value gap on this day? Yo, Jake, I'm so pissed missing that 1 second opening spike. Bro, what were you gonna do? Like 1 second? That's not. There's no way to even. There's no price action to even trade, bro. That would not even be trading. That would just be blindly. I feel like just blindly executing. But it would have been fun to get in on that. Of course, it would always be fun, but that's more like just like that's more just like it's jumping into just like it's a YOLO. It's a YOLO. I'll say that. Oh, evals. Oh, that's fair. That's fair. I see what you're saying. Yeah, gambling. It's a fun way to gamble. Hey, there's always gonna be another CPI. There's always gonna be another NFP. There's always gonna be another FOMC. So you got more opportunities to gamble. Honestly, if I was to gamble, bro, I would just basically find a high probability draw on liquidity, like for instance, like this RTH gap, and then once we just start displacing like crazy, I would just put in micros, and I would just target the fill of the RTH gap. Like I feel like that would be the best way to gamble. That's what I would do. But then again, I'm not trying to be a gambler, so. But that is a fun little thing. You missed out on the fun little gamble. Dang it. So I guess let's look and see if there's a 30-second change in state. Once again, it's not necessarily obvious, but we just look at the markets, we learn from that. So it was a reclaimed BPR, right? We used it once. I think I looked at this already. Let's actually just look. I'm pretty sure that I've looked at this. I'm pretty sure. Yeah, man, I've looked at this. I don't even know what trades have I not looked at, bro. I've definitely looked at this. I don't even know, man. I guess let's just go through price action and just look for something obvious. So, remember this, actually, I was talking about I think this was on Tuesday, I was talking about how I didn't think we were ready to go higher yet. Jake's big one-shot eval slayer. Bro, like, genuinely, like, RTH gap fills, I feel like that's got to be the best way to gamble. Like, right at market open, find that RTH gap, target the other side of that. That's gonna be like one of the best ways ever to gamble. If I had to pick a way to gamble, that would be it. Because RTH gaps get filled right at market open, like, so often, it's ridiculous, bro. It is ridiculous. I mean, like, you go backtest it. You're gonna see some crazy opportunity. It's insane. Just target that RTH fill. Honestly, I'd probably already be a millionaire if I just let myself do that. Like I might. I don't know. Because I've seen RTH gaps get filled so much. I've seen it happen so, like, I can't tell you how many opportunities I missed because I'm like looking for a sniper entry, and then it just runs down to the RTH gap. I'm like, bro, if I just took a one micro entry. Next night Eva 90% off. Let's do it on stream or show me on backtest. EG. Well, I'm banned from Apex, bro, because they banned me. I traded too good, and then they said, "Yo," they basically told me, well, they actually stopped responding to my emails. That's what happened. So call it what you want, but like in my opinion, they banned me because they put my account on review. That, to me, that's just banning me because I can't, and they're not responding to my email. So as far as I'm concerned, they banned me for trading too good. It is what it is. I'm gonna move on to Take Profit Trader and Tradeify and Alpha. I'm a copy trade across all those guys and Top Step, and yeah. But it's kind of annoying. So this is worth looking at. I'm not even gonna lie. Look at this. Looks pretty obvious. Yeah, true. Next time is 9% off. We should. Okay, wait. This is actually really stupidly obvious. What the heck? Am I just blind or crazy, or is this not just like the most obvious thing in the world? Phoenix model too. Bro, wait, did I mark this out? Did I? Oh my gosh. Did I mark this out? No, I didn't even backtest Thursday morning at all, bro. The crap Thursday morning was clean. Look, we have a bearish SMT. 7:30 got taken, which is the true open. Yo, this is clean. Okay, we found ourselves something to backtest. This is good. This is crazy clean. Right? We had 7:30 right here. Look at that. Look at how perfect that is. Not to mention it was, oh, I swear I did actually. I remember this day. This was that the triple stacked sequential SMT day. I'm pretty sure. Still though, like the way we sweep all these true opens was just beautiful. Okay, look at this. I mean, this was the most obvious trade. Liquidity sweep, S&T, sweeping midnight and 7:30. Obviously, this is AMD or AMD. Let me show you. Whoops. Accumulation. Manipulation. And then let's actually include midnight as well. Man, all we gotta do is lock in. We're gonna catch trades like this. Okay, let's get rid of this. Do you see how the true opens were helpful to identify this manipulation? And then, yeah, we get a liquidity sweep. When you look at it like this, it's so obvious, dude. Liquidity sweep. Break of structure. And then, wow, fair value gap. Perfectly filled. Oh my gosh. This was so obvious. Am I blind? Am I blind? How did I not see this on Thursday? Maybe I did take... No, I didn't take a trade on Thursday, bro. I'm dumb. I'm officially dumb, dude. And then if you measure out the displacement, this was probably equilibrium too. Oh my... Bro. This was so obvious. Actually gonna rage right now. Liquidity sweep, break of structure on the 5 minute, right? And then we have a really nice displacement leg here. I'd honestly measure premium to discount of that. Oh my gosh! I'm going to lose it. This is the most obvious trade in the world, and it was a sniper entry. Perfect entry. This is the market being perfect. At its finest. Oh my gosh. Honestly, I don't even need to look at the higher time frame in this situation. This is just so clean. And then we induce the high. Oh my gosh. Look at this. Accumulation. Let's just mark it out like this. Accumulation. SMT. So this right here is manipulation. It's above every single true open. It's also above 922. It's also above 928, which are both the other true opens. Oh my gosh. These markets, I feel like they're going to get to the point where they're just easy. They're just going to become easy for us. Like, this was obviously a soup into the rejection block. But yeah, I would take this inducement right here. Why? Because very obviously we have an old high resting at a 5 minute fair value gap at equilibrium. It's like... Dang, bro. This just makes me mad how obvious this was. Oh my gosh. And I think it was a gold block fair value gap as well. Oh my gosh. So look at this, right? We can measure out displacement like this or like this. Honestly, I like the most clear straight shot displacement leg because that is going to be the most obvious one on the chart. Oh my gosh. So you guys see what I'm seeing here? We sweep liquidity into that 2022 gap right there. Inducing this high right at equilibrium. And it's a sniper entry. It doesn't get more perfect than this. Let's try and just keep it clean. Oh my gosh. So for anyone wondering how you trade this, you just enter as an inducement of this high. Literally right as we hit that fair value gap. And your stop loss I'd put it, honestly, you could either have it here or here. Honestly, I put it there. That's what I would do. If you want to be a sniper, you could have a even tighter one, but not super needed. And then you can project out the manipulation leg. Look at that. OTE gets tapped. 1, 2, 3, 4. See what? So this might actually be better to mark out. Once again, we might want to mark out from body to wick. 1, 2, 3. Okay, so there's not. It's tricky. I guess maybe you want to do this one. Yeah, probably this one. Oh, yeah. So this was the manipulation leg you would want to use. Now this is making sense. You see this? This one right here. Use the bodies. And then you can see we hit that fourth one. Yeah, that one was nice. That's the one you want to use. So inducement of this high, stop loss could go here. What a straight shot trade. You don't even need most of the stop loss. Imagine I took this live. People would be freaking out, bro. Freaking out. They'd be like, how did you do that? And you know the craziest part about this is we can get very, very precise with the next true open. I think. Could be wrong. Let me think. I actually don't think there is one. Sorry, there's not. So, 2022 model on the 5 minute. We could even have a tighter stop loss if we wanted to. Honestly, I don't mind it being a tighter stop loss. We don't really need that much of a stop loss here. Because the whole point is if we induce this high, there shouldn't be drawdown. Whew. I don't know. We don't need to do that, though. Let's just have two different versions of the trade. Let's just do that. So, here's version number 1, where we get a liquidity sweep, a break of structure, fair value gap that forms at equilibrium. Oh, I need to switch this back to picture. Alright. So this is version number 1. This is on Thursday, I believe. Oh my gosh. Not to mention it was right in the macro too. Okay, we gotta include the macro. Let's re-screenshot this. Oh my. Wow. And then the drawn liquidity gets tapped. So I'm gonna have a video coming out soon about this, but if we ever get our entry going into the macro like this, yeah, this is just beautiful. Clean as heck, dude. Once again, we don't need this big of a stop. We can have our stopper at that. Or we could even, yeah, I'd probably put it there. But let's just show both versions of the trade just to show it. So this is version number 1. We enter as an inducement right at 9:51. Obviously, you could have waited for reaction as well. That's perfectly fine. This was on Thursday. 9:51. 2022 model on the 5-minute. Another way you could take this is with a tighter stop. Let's say you want to be more aggressive, because the whole point is this is an inducement. So like, you're basically saying if we're really truly going to induce this high into the fair value gap, we shouldn't have drawdown. And I probably realistically go break even right when we tap that low. So this more aggressive version, 9:51. This was on Thursday, right? Yeah. 2022 model, 5-minute, number 2. That's clean, dude. That's clean. All right, I might take a break, guys. And once again, the reason I don't have the macro going out all the way till 10:10 is because, well, the obvious draw on liquidity was hit. So in my definition of a macro, the macro is from the entry point to the draw on liquidity within that time. That's my definition of a macro. So, yeah. All right, taking a break. Alright. Alright, what do we look at now? Isn't it just amazing how perfect these trades can be? Like, theoretically, you could even have gone more aggressive with this inducement. Be 9-1. Because, like, let's say you just had conviction that this was going to be inducement. Well, let's do a version number 3 of this, where maybe you do a super. This would be on a just for fun account. I wouldn't take this as a real trade, but you know, having conviction in this inducement, maybe you could take this just for fun. This aggressive version. So. Number 3, aggressive. Just for fun. Alright, now, not really a good 30-second change in state. It's always interesting to see, okay, did we use this later on? We do right here. But I don't trust that. I don't. At this point, it's obviously the buy side of the curve. So, yeah. I mean, a lot of people go long when they see inversion, but it was too soon. It was too soon to go long in this context. Yo, we making money this week? Heck yeah, bro. Heck yeah. I'm gonna try and make sure I always show my trade. The execution on the live stream. That's honestly my goal, is to make sure I'm very transparent with you guys. Like, whether it's a loss or a win, I want to have that on the execution on my live stream. I want to be able to pop up trade Top Step and Tradeovate and like show you guys, here's the execution, here's the stop loss, or here's the take profit, and it's either gonna hit or not. And the reason I do that is because not showing that is a form of fear, which is a form of emotion. And if I'm truly going to be emotionless in my trades, I should be totally transparent about it. Obviously, it's not fun when it's a loss, but it's part of the process and part of being emotionless. So yeah, I'm going to try and make sure I show the execution live on the stream. I'm going to ideally make sure, but yeah. I guess sometimes I forget, but I try not to. If I forget, remind me. Yeah, that was clean. There was no lower time frame change in state out of it. But yeah, very obvious AMD. We actually not only took out those, the 7:30 and the midnight true open, but it gets real crazy because I'm just going to show, I'm going to get rid of everything else now. I'm just going to show how actually we manipulated like the microscopic true opens as well, which is why it's so mind-blowing how precise quarterly theory can be. It's genuinely mind-blowing, right? We get SMT above 730, so that's right here. So here's here's midnight, here's 7:30. But this manipulation, it wasn't just of 7:30 and it wasn't just of midnight. We can actually go down to a 90-minute cycle. The true open of the 90-minute cycle would be 922. And check this out. We manipulate 922 here. So we're above 922, midnight, and 7:30. It gets crazier because guess what else, right? We can break it down to a 22-minute cycle. And we also manipulate the true open of that. This is what I mean when I say combine all the true opens together to help you identify the manipulation, because it's going to be mind-blowingly precise. Mind-blowingly precise. I can't even put in, and I'm going to hopefully make a long-form video about this soon, but you see 928, I guess 928's right there. So we really were above every single one. And then we get this right at 928. We get this final pop up, manipulating all of them. with SMT, we actually tap consequent encroachment of the rejection block. That on its own was a Phoenix model entry. And I would definitely have conviction in it because of being above the true opens, right? That's just on its own, that's just going to be such a high conviction trade because of the true opens. So let's actually show this so you guys don't think I'm crazy. We can actually pull up the 5-minute chart, and you can see we have SMT with a rejection block. It's this one, right? This rejection block took liquidity, so it's a high probability rejection block. Bang, bang, top, right? Liquidity sweep into the rejection block. Here's the rejection block, bang, and let's go bring this down. Let's actually clean up the rejection blocks because that was clean, bro. That's about as clean as it gets. Let's actually clean up the rejection blocks. Get rid of that rejection block. Get rid of this rejection block. Let's get rid of all the other rejection blocks because I don't use them. Yeah. Honestly, that's fine for now. Right? So we can get very precise with this. Looks like that. Oh, man. We were so close to tapping consequent encroachment. So, it goes to show sometimes maybe you want to front run that consequent encroachment because here you can see the perfect example of us not actually tapping it. And a big reason for why that might have been the case, very logical reason for why, is it was maybe a 15-minute one instead. And that 15-minute one might have been slightly longer. No? Okay, well, maybe it was a 30-minute one that was slightly longer. Either way, it doesn't really matter. You might, it just goes to show sometimes maybe it's within your risk preference to take an entry slightly in front of consequent encroachment of the Phoenix model. That could be within your risk preference or risk tolerance or whatever. Alright, once again, above every single true open, we can mark these out like this. And then the true session open as well. So then, what happens? We induce this high into the rejection block. Honestly, guys, you can just take this as an inducement. That's a perfectly fine way to go. Realistically, I'd wait for a change in state off of it, but let's just say I took it as an inducement. Very clean trade. Drop down to a really low time frame because I just want to be able to see this in its detail. 15 seconds, fine. So, very obvious range below. This is exactly what you want to see for this kind of trade. And then, yeah, we induce the high. Maybe you wait a little bit, right? We push up into it. Maybe you, since this is right before market open, maybe you wait for a reaction. Honestly, waiting for a reaction is not a bad idea. Anyway, we induce this high. That's the point, is we induce this high. The reason I wouldn't take this is it is right before market open. So because of that, good chance I probably wouldn't take it, just because I don't know, I'm still getting better at taking a Phoenix model right before market open. That's still kind of scary to me. But did end up working out here. Honestly, just to be able to show it a little better, let's adjust the rejection block. And yeah, you could have basically entered any point above that high as an inducement. Okay. So I would short like this, like bang, maybe just, yeah, like something like that. Right, you see how that would work, right? So this is a Phoenix model, Phoenix inducement. And it's above every single true open. So this was right before market open on Thursday. 9-29 Phoenix inducement. Once again, very risky trade, very scary trade, but very professional trade if you know what you're doing. Phoenix, I'll just call it Phoenix-I. And then 5 minute. So anytime I do -I, it's just entering the model via an inducement. Using an inducement of an old high. 9:29 Phoenix inducement on the 5 minute. Save. Yeah, that's clean. No, it's gonna keep getting better. Let's see, is anyone watching? Oh, there's 2 watching. Nice. Yeah. Pretty cool how we induce this high. Hey, what up, Simon? Simon's here. Yeah, of course, you could have held this longer. If you're a degen, go for it. You know what I mean? It's just, you don't have to take trades like that. But, yeah. Either way, though, right? You don't have to take this inducement as a Phoenix model, obviously, right? More realistic way to use this, right? This is kind of like a robot type of entry. I was saying this last night when I was backtesting. It's like some of these Phoenix models, they're not super realistic for us humans. But the nice thing about it is we can use what happened. We can observe it, observe the Phoenix model occurring, and then use it to take the trade later on. That's usually going to be a 2022 model that happens after. So this, for instance, was a 2022 fair value gap that occurred. So we had a 5 minute rejection block, break of structure, and then a 2022 fair value gap. We used this robot type of entry to catch a more realistic type of entry later on, which would be this inducement into this 2022 5 minute gap, right? And that was the more realistic trade here. But do you see what I mean? Like, this might not be super realistic for us because it's a very, very advanced trade. Are we observing it happening in the market? Yes, 100%. It's 100% happening. Probably more realistic trade is observing the robot type of entry, saying, okay, the market got a break of structure out of that, so Phoenix model is in. Now let's wait for our next entry, which is going to be at the 2022 gap, and then snipe that, and then bang. You see what I'm saying? It's all different pieces of the same puzzle used together. So I want to see if there's new day opening gaps. Man, I was getting excited. How cool would it have been if there was a new day opening gap right here? It's always fun to just kind of like look around and see how did the market actually even interact with new day opening gaps and new week opening gaps. And then seeing what trades formed out of them. Like this, right? Like this. The market in its perfection is beautiful. And I know this was an Asia session, but still, right? Pretty cool. And oh my gosh. And you know what? You know what? Before we ended up getting that 2022 model to the downside, it was delivering from a reclaimed new day opening gap. Look, we use it once, twice, 3 times. Oh my gosh, bro. I didn't even realize that. Supercharged new day opening gap. No wonder we dumped. Meaning supercharged is my own made up name for any time we reclaim a gap. Not just twice, but 3 times. It's my own made up name. I call it supercharged. That's crazy. And so the amount of conviction I would have after we supercharged this new day opening gap and then broke structure here and then formed a fair value gap within that support and resistance, bro. It's also a actual PD array. Like it's a key level in the market, right? We use it once, we use it twice, we use it 3 times. We sweep liquidity into the new day opening gap. So there's the liquidity sweep. So it's also AMD. Do you see how it's AMD, right? Accumulation, manipulation, break of structure, 2022 fair value gap right here. So yeah, you call it support and resistance. That's fine. You call it whatever you want. The reality is we're observing the market in its natural form, which is call it whatever you want, but this you call it support and resistance. For me, I see it as a key level that got used 1 time, 2 times, and then the 3rd time when we rejected a 3rd time. That's from my back testing. That's gonna be super powerful behavior and price to distribute the opposite way. It's just something I've noticed over time that when we use like a gap or a fair value gap or a PD array, that's where we have to keep getting better. That's the thing. I mean, I could definitely see it if I saw that the way we were interacting with this new day opening gap. All right. That's how we just keep learning and keep getting better. So yeah, use it once, use it twice, and then the 3rd time right here. It's always they always say it's hindsight until it's not, right? I really do think you can catch this. It's not rocket science. New day opening gap, right? Accumulation, manipulation, supercharged. So I'm gonna actually, anytime something's supercharged, I'm gonna notate it. I'm gonna notate it with an S. So like an S dash supercharged end dog. Do you guys think that looks good or does that look stupid? Oh, what if I do dollar signs? Is that stupid? Is this stupid? Supercharged end dog. Is that stupid? That's stupid. No, because dollar sign means liquidity sweep. What if I do the @ sign? That looks stupid. Guys, help me think of a notation for how to notate if it's supercharged. Oh, I know. I got it. End dog. There we go. If it has an exclamation marks around it. Okay, there we go. Anytime I have exclamation marks around the end dog, it's supercharged. Alright, there we go. I figured it out. And let's actually make this darker. Use a lightning. Bro, I don't have that on my keyboard, bro. That's not a thing. Otherwise, it'd be kind of cool, but nah. But yeah, you see how we use this 1, 2, 3 times? From my own personal backtesting, anytime we use like any kind of gap, whether it be a New Day opening gap or a fair value gap, if we use it 3 times, it's going to be a super sensitive gap to frame a sell model off of. So you can see that occurs right here. So accumulation, manipulation, break a structure. This was actually in the fair value gap partition of our gold block range. So it's a 2022 gap on the left panel. Click the smiley face. On the left panel. Yeah, I don't know. I don't know if my computer has that. It's not a computer, it's a laptop. Yeah, I don't have the luxury of emojis. That's a rich person thing. Yeah, bro, I don't have that. You want to see? No emoji button. On trading view. Nah, I'm not seeing it. Oh my gosh, what just happened? Bro. It went to the current price. Alright, whatever. Oh wow, this was on Friday. Yeah, this was on Friday. Alright, whatever guys. I'm not too concerned. I think the exclamation mark's fine. And then yeah, we get a 2022 fair value gap. And the cool thing about this, or left your screen. Oh. Now we're cooking. Bro, I need to shut up. Where's this lightning bolt, bro? Oh my gosh. Can I not search? Oh my. Oh. Alright, now we're cooking. There we go. Anytime I don't have the emoji, I'm going to use a exclamation mark though. Let's just do that. I like it. And so, by the way, guys, not only was the 2022 model, but this was also the fair value gap was perfectly in the gold block range. this is like when you really start to actually dig into the charts and see this happening over and over again, you'll realize that it's actually very useful for framing a 2022 model. Like, check this out. So I'm gonna go up, bring this up 12. You'll realize how useful it is once you've observed it happen so many times, right? Well, we swept liquidity, the fair value gap forms, right? The fair value gap partition, right? And so, yeah, hate on me all you want, but when it's a confluence, it's gonna work like crazy. And so that's why I will continue to use Goldbach, because it's when it works, it's gonna be nice. All right, there we go. 1, 2, 3, accumulation, manipulation, supercharged new day opening gap, and then we got a 2022 model off of it. And yeah. Let's just call this a 30-second one. And you'll note we also came to equilibrium of this, so pretty cool. Not saying I would catch this, but you know what I'm saying? It's very precise. So 10:55. This is on Friday. I kind of already have this in here, but record it again. 10:55. 2022 model. I just marked this one out as a 30-second one. And then bang. Yeah, 10:55, right? Yeah. Yeah, 10:55, 22 model, 30-second. I think that's good. It's on Friday. Yo, what up, Sorab? How are you, bro? It's been a while. Look at this. Look at what happened right before the drop. Isn't this crazy? Very clean accumulation, manipulation, distribution, delivering off the new day opening gap. We use it 3 times. Anytime we use either a gap or a new day opening gap 3 times, like we reclaim it 3 times, I call it supercharged. So that's why you see the lightning bolt. And then we get a break of structure, a fair value gap that forms. It's perfectly in the Goldbach partition for where the fair value gap should form. You see that? We sweep liquidity into the high dealing range, Goldbach partition. It's crazy. Crazy, but it's just, these markets, they're precise. It's like 5:30 a.m. in here, didn't sleep. Oh my gosh, my computer just turned off. What the heck? Did it unplug? What just happened? Oh no. Yo, what's going on? Why'd the computer unplug? Shoot, I have to go plug it in. Oh, I have to go all the way under here and plug it in. Okay. There we go. Oh, man. Do we keep backtesting or do we call it? I mean, there's always more to backtest. I love trades off of New Day opening gaps. I kind of want to look around for more New Day opening gaps. You're going to see so much opportunity off of them. Let's look for more. I mean, New Day opening gaps and New Week opening gaps are honestly some of the most powerful PD rays. And first presented for value gaps. This one was clean. We'll take a look at this one next. There was probably some other kind of PD array as well. But this one was just a regular reclaimed New Day opening gap. Do you have some backtesting software like Trade Zealot or FX Replay? I use a Reflect IQ, which is AI journaling software to journal, but I don't like the backtesting software like FX Replay and that kind of stuff, because I think you don't, although it's helpful, like for me, it's just not my style of backtesting. I really, really strongly dislike it because there's it's hard to explain. I've explained this quite a few times. It's like it doesn't feel real. Whenever you're on there, the candles generate funky. I don't have my indicators. I don't have my templates. I don't have a ton of things. It doesn't feel real. You have to pay for it. Keep in mind, it costs money. There's a million reasons why I don't use it. I feel like you can learn everything you need through the actual charts, and then the actual practicing comes when you're trading, for real. That's just my opinion on it. I don't like it. Other people will disagree with me, and that's fine. But yeah, that was a nice New Day opening gap that we used here. Let's get off the 15-second chart real quick. And let's see, was there another reason for a reaction there? Yeah, we use this 15-minute gap again. Oh man, maybe I'm getting kind of tired. Maybe I don't want to keep going right now. I don't know, guys. Should I keep the stream going? Should we keep backtesting, or should we call it? Oh, there's 5 of you guys watching now. Okay, we'll keep going. So, yeah, we obviously swept out all these highs. There's probably some kind of gap here, if I had to guess. Yeah, so we have a clear gap right here on the 5-minute. That looks pretty clean. So this is the one that I would mark out because it's just very obvious and above all of these highs. This one's also nice. And you can see we use that one, but this one's even better because the New Day opening gap is resting right above it, so I like it even better. So that's a 5-minute for value gap. And then deep premium here. Let's take a look at true opens as well. We might find something very interesting about Asia session today from this. So the true open of Asian session. So Asian, technically, depending on where you look or where you go, is going to open at 20 and and end at midnight, and that's usually what I use. But from a quarterly theory perspective, it's going to open at 18 o'clock, which means the true open is going to be 19:30. So I'm going to mark out that as our true open. There's that. So we are above our true open. So once again, do you see how having the true opens is helpful? It's helpful to frame the best, most highest likely trades that are gonna be useful in line with the true opens. Now, something I'm curious about is there's no midnight open in this case. So was yesterday's midnight open relevant at all? Kind of. We were above midnight from yesterday. I don't know if that's going to matter, but I guess let's drag it over. Maybe it will, maybe it won't. I'm not sure. We're just experimenting with it. So I put a -Y, meaning this is yesterday, because it's Asia session, we don't have a midnight open yet. So considering just using midnight. Then after this, right after 19:30, forms, we're gonna have 90-minute cycles. So there's gonna be 19:52 is gonna be a true open. Hi Jake, how are you doing, my friend? Dude, I'm doing good. We're just doing some back testing. I'm reviewing a trade in Asian session here. The way we reacted off the new day opening gap is very fascinating to me. So I'm reviewing how you could have framed a trade using this idea. So we had 1950 true, which was a true open. That one's not the one that was useful for this trade. So let's move on to the next 90-minute cycle. The next 90-minute cycle starts at 20:30. Okay, wait. Yeah, wait. No, it starts at 21. Okay, so this is where things will get interesting, right? 21 is the next 90-minute cycle starts. So, from a quarterly theory perspective, Asia session, what was it? AMDX or XAMD? What was it? It was X. So, Q1 was X. And then Q2 was A. So, 1930... 21 was A. And how are you going to identify whether a 6-hour or a 90-minute cycle is XAMD or AMDX? How are you going to identify that? The way you identify whether it's AMDX or XAMD is based off of the true opens. The true opens are going to be your key to determining if it's AMDX or XAMD. You got to use the true opens. So the way I say this is, what's the true open of this 90-minute cycle? It's going to be 21:22. Technically 21:22:30, but I'm just going to have it be 21:22. So once again, I don't normally trade Asian session, but this is a learning experience for if we ever did trade a Asian session. So 21:22. I just like to learn. I like to observe the charts and learn and backtest. Backtest until I can't anymore, because that's never gonna happen. I'm never gonna stop backtesting. I don't know. I like it. I just like backtesting. It's cool. Okay, 1930. Yesterday's true day open. Then we have 21:22, which is the 90-minute true open of the third quarter, because we identified this cycle as XAMD. And this is very interesting because, let's see, 21:22 actually How's Dark Phoenix going? Dude, it's one of the craziest things you'll ever see. Once you start backtesting it, you'll realize it's not necessarily just, it's the Phoenix and Dark Phoenix. They're kind of all one model, right? It's just entering at the high of the market maker model. I'm going to explain it. What is AMDX and XAMD? I've never heard about it. Yeah, I'll explain it for sure. First, let me talk about Dark Phoenix, because you guys might not understand or what I'm talking about when I say that, and I'm going to explain it. So 21, 22, this is the true session open. Okay, so within AMD, you're always going to basically have the same type of phenomenon occur. I've talked about this in so many videos, but you guys already probably know this by now. We're going to range. Happy to see you in the mood, Jake. Hey, yeah, I'm just ready, locked in, and I'm enjoying backtesting right now. So this is gonna occur in markets over and over again. Market's gonna range, right? Range, sweep. This is manipulation. Now it's never gonna be this simple, guys. That's why not everyone's making money, right? It looks simple when I draw it out like this, but this is an oversimplification of it. Sometimes maybe you'll have a, you know, it's gonna be kind of, it's all about identifying it correctly, right? But accumulation, manipulation, and then distribution, right? This is gonna occur over and over again in the market. So when you identify this hot manipulation leg, you can project out the manipulation leg, and as always, the fourth standard deviation is going to be essentially the final target, or it depends. Like technically, sometimes you could go further, but this is usually our max extension. What up, Shani? What? Okay, but you guys get what I'm saying, right? AMD, it's going to recur in the market over and over again. The first possible entry within AMD, within any AMD cycle, is going to be to enter at the high of the SMT. This is a rejection block entry. This is going to be, here, I'll show you what I mean. So, I saw FA can predict the gaps. Bro, some of the stuff FA was saying was just like, I don't know, man. I don't really totally understand exactly how the new day opening gap and new week opening gap actually technically form, and volume imbalances for that matter. But also, I don't just blindly trust everything FA says either. Okay. So, the first trade within any AMD cycle is always going to come from the rejection block. And this is going to be whenever there's an old swing high with an SMT, right? So, SMT, so, all right. So let's say this was an old higher in the market. The first opportunity is always going to come from this rejection block, right? And we'll get a manipulation into the rejection block and then distribution. So this right here, this is Phoenix model, right? When you enter as an inducement of an old, it doesn't even have to be an inducement technically, but you enter with SMT as a you enter with SMT into the rejection block. That's always going to be the first entry. On the correlated asset, what will happen is we'll actually get the same thing occurring, but the rejection block is going to get taken. And so when this happens, we see the S&P, or let's say this is S&P 500, right? S&P 500, and let's say this is NQ, or let's do NQ because we're doing futures, obviously. NQ, and this is ES. Right? this is Phoenix model, where we push into the wick of this old swing high with SMT, and then we enter at the rejection block to get onside with distribution. This is always going to be the first entry, and it's going to be the high of the market maker model. But on the correlated asset, we're going to have the same rejection block, but it's going to get swept. The rejection block is going to get swept. And so, based off of if Phoenix model is happening on the correlated asset, guys, really pay attention to this because this is the most important part. If Phoenix model is occurring on the correlated asset, you can turtle soup the rejection block on the original asset. You can turtle soup the rejection block on the original asset. Let's draw this out a little better. And so the reason is because SMT is forming. We have Phoenix model on ES. So SMT is happening with NQ. We can soup the rejection block on NQ. And I call this dark Phoenix. So regular Phoenix entering as a soup of a rejection block on the original asset is the dark Phoenix model, right? This is always going to be the first entry within a market maker model. It's always going to be the first one. It's always going to be the first opportunity. Then, after we get the rejection block entry, which is either going to be Phoenix model or a dark Phoenix model, then what happens next is we'll get our change in state delivery entry, which is also your order block, which is aka flow state. So that will, let's say that occurs right here. So the change state delivery will happen next, as well as the inversion for value gap. So the inversion for value gap will occur here. The change in state of delivery will occur next. The change in state of delivery will occur next. And then, so this is the flow state entry, right? So you want to look for a 30-second change in state. I don't know if anyone's watching this, but this is very valuable stuff, guys. Exactly. 30-second change in state delivery. So then this right here, so dark Phoenix, Phoenix. Flow state entry. And then also this one's flow state entry as well, right? And then what's going to happen next? The fair value gap is going to form, right? The fair value gap for the 2022 model is going to form within this displacement leg. Hang on. So yeah, what's going to happen next? The fair value gap is going to form. Here, let's just delete that for now. Let's just say it was like this. Then the fair value gap is going to form. We want to see this fair value gap form at equilibrium. And then after the fair value gap forms, then we expand to our max. We'll probably retest this, and then max extension gets hit. So I don't know if anyone was watching this, but this is super valuable stuff, guys. Super valuable stuff. If you watch this, it's completely free. Dark Phoenix, Phoenix. You see how every single model is all part of the same AMD. Every single model is all part of the same AMD, and this is why understanding AMD is the most important part of trading. Every single model is all part of AMD. Okay, hope that makes sense. So, I don't even know. 5 high time frame. Yeah, 5 minute key level aligns with a 30-second change in state. At least that's from my back testing. You could actually align it with a 15-second one if you want. It's kind of up to your own back testing, but that's what I've seen. and that's what I like doing. Someone else asked me about something else. Oh, what's AMDX and XAMD? Basically, oh man, I'm gonna have to make a short form video on that. Man, it's gonna take a while to explain. Maybe I'll just make a short form video on it later. But at its core, it's just AMD with its accumulation, manipulation, distribution. But it's either gonna happen. AMD is either gonna happen in quarters 1, 2, and 3, or quarters 2, 3, and 4. And so you have to identify which one of those it's gonna be. In this case, it was quarters 2, 3, and 4. Well, actually, might have even been just 4. Okay, this is getting kind of confusing, but you guys get what I'm saying. Let's actually see if there was SMT, because if so, we're gonna be cooking here with this trade idea, or with this backtest. Oh my gosh, bro! Why is it so glitchy though? What? Oh, it's equal highs. Oh, that's ugly. Yeah, that's actually kind of ugly. But there might have been SMT with YM. Yep, there was. Clean as heck. So, yeah, we're above true session open. We can drag this down again to an even lower cycle. So, your model is pretty much the same with mine. It's just backtesting. I'm just backtesting, but it's going very well. My model is just AMD. So, I could take an inversion for value gap. I could take a Phoenix model. I can take a flow state, which is a change state of delivery entry. I could take a 2022 model. I don't care. The key is aligning the AMD, making sure it's aligned with the draw on liquidity, making sure it's aligned with AMD, and making sure time and price is aligned. Past that, I don't care which entry I use. That's like, they're all just different weapons in my pocket. But I don't care, right? The key is waiting for time and price to align, and then being the assassin that you are. That's really what it is. So 2230. Yeah. Anyway, maybe there's a 15-minute gap, because I'm not liking how low time frame that price action was. Exactly. No, there's not even a 15-minute gap though, is the thing. Well, maybe a 15-minute implied gap. Let's go back down. So, although we use this new day opening gap pretty well, I don't know if there's opportunity. Like, it's just, the price action is just not good. That's why I say that, right? I do not like the look of this Asia session price action. Makes me want to throw up. I hate how these candles look. So yeah, I don't even know, man. Yeah, there might have been opportunity here. I don't know. Not really my cup of tea, if I'm being honest, now that I'm looking at this again. But it is interesting. We were above the 20. Okay, maybe the true open. This is an interesting thought, right? Because we're using midnight again. We're using midnight again. We're using the midnight of yesterday for today's Asian session. Maybe that same concept applies for a 90-minute quarter. So this is the 90-minute true open of the previous quarter. We haven't got the new 90-minute true open yet. Wait. Yo, that actually makes sense. Because you got to have a reference point for midnight, but it hasn't formed yet. So you got to use yesterday's. So we have to use yesterday's midnight true open. I don't even want to mark it out like that because there's only going to be one possible true open. Yeah, so same concept applies for a 90-minute cycle. We got to use the previous 90-minute true open because the new one hasn't formed yet. You get what I'm saying? The new one hasn't formed yet, so all we have is the old one. Oh my gosh. Okay, I gotta go use the bathroom. That makes so much sense. We can't use the true open if there's no true open for the cycle that we're trying to use yet. Like if we're taking the trade in Q4, if the opportunity happens in Q1 of the next cycle, we have to use the previous cycle's true open. Dude, that makes so much sense. I have to use the bathroom. That makes so much sense, bro. Alright, so this may or may not be a thing. Whoops. It may or may not be a thing. True opens might only be valid until the end of Q3 because AMDX and XAMD, right? There's never going to be manipulation in the fourth or the first quarter. But I want to experiment with both schools of thought, that the true opens are valid until the end of the next cycle's Q1, or that the true opens are valid until the current cycle's true Q3 because it's either going to be AMDX or XAMD. So I'm gonna be, as always, these markets will teach you everything you need to know. So you just have to go into the markets with a blank slate and just let the markets teach you. Bro is unlocking the secrets of the market. Dude, this is all I do. like I just let the market kind of show me its thing and then learn from it. 4 hour is 16 times more than 15 minute. Yeah, it's true. You can play with the load time timing is like 5 minute to 18 second. It's not, wait, what? 5 minute to 18 second. Wait, what's 18 second? What's special about the 18 second time frame? It's interesting. Wait, 90-minute cycles, 22.5-minute cycles. There's something interesting to what you just said. I don't really quite understand it, but anyway, let's move on. 5 minutes is 16 times more than 18. Dang. Wow. That's crazy interesting. Anyway, we're going to experiment with everything. As always, I just try and figure out from the market itself and just observe and let the market show me, okay, which school of thought is really more valid than the other. So right now we're kind of experimenting with this idea that the true opens stay valid until the next one forms. So with that in mind, it would actually make a lot of sense because now we're only looking for a let's see, 21, 22. So every 22 minutes is going to be the first 22 minutes of any 90-minute cycle is going to be the, not true session open, I meant 90-minute open. I messed this up. Did I mark this out as true session open? Oh my gosh. So then 22:30. So then if we have a 22-minute cycle, 22:35, 22:36. I mean, it's a very interesting, train of thought, right? This ended up time and price aligned perfectly at the high of the new day opening gap. I mean, it might not be a thing, but it's always interesting. So you kind of see the school of thought that I'm running down here. So we basically aligned time, and you can see the manipulation occurred right when it should. I kind of want to see if this is a GB range. I'm getting a little into the weeds right now, but this was definitely a dealing range high. That's kind of cool. You clearly see this was the high of a dealing range. Let's drop this down to 27. Too big of a dealing range. Yeah, dude, that's really nice. I think I saw this happen. Wait, I looked at this earlier. Oh my gosh! Don't move. Stay where you're supposed to be. Yeah, it's interesting. So the order block starts out here. The rejection block. It's perfect, guys. Wow. Stop moving. I'm in the dealing range low. Okay, this is really cool. Nope. Oh my. Are you... Bro. Really? Alright, so... let's see if there was like a 2-minute rejection block or something here. If there was even like a 3-minute rejection block at all, we're gonna find ourselves possibly cooking here. Asia session. Cooking an Asian session. Yeah, look. Right? You see this? So, into the high of the dealing range, 3-minute rejection block. So this is a 3-minute sell model, right? Cooking. Time. Gold block is price. Quarterly theory is time. 3-minute rejection block. In the dealing range high. Expansion to the dealing range low. So what is this? This is a 27. What? 27, right? Yeah. And then I think after this, I'm going to be done. Edge full data. I want to learn more about it. I don't really know much about the edge full data. Yeah. Okay. Thank you. All right. I'm probably gonna finish the stream. Just... okay. Oh man. So yeah, above true session open. I'm trying to clean this up to make this a little bit more clean. But we're above midnight of yesterday. Above the 90-minute cycle. And then we can align the 3-minute with a 15-second. Yeah, you can see how precise this market ends up being. We go from the 27 high, and the rejection block is right there, to the 27 low. Now how would you take this? I don't know. I'm not even sure. There's no... The change in state is just... This is not obvious. I would never take this. So I guess there's not really opportunity, but I just kind of thought this was interesting. Okay. Honestly, I feel like my brain is just cooked right now, so I'm going to be done. But it is interesting. What day was this? Thursday Asia session. Thursday Asia session, QT and G Goldbach let's call it exercise. All right, I'm gonna end the stream. Thank you guys so much for watching. I'll see you guys in the next one. Peace out.